Hi everyone, welcome to our channel India Equity Investing. And today we are going to briefly review our equity portfolio and see how it has performed over the past 4 years. So I was a little bit hesitant of sharing our own internal portfolio, but I thought this will give you a brief glimpse into the kind of investments we have made, the kind of expectations we have and the way we think of investing in the stock markets. So, here is the summary of the investments we have made over the past few years and what we currently hold as of today. So, in total, there are around 18 odd stocks in which we have invested capital. Our top 10 investments accounted for around 82% of the total capital allocation, which reflects the initial investment that we had made in the markets. Incidentally, even today, our top 10 investments by capital allocation account for around 83% of the total NAV, which is as of 21st of August 23. So 82% of the capital allocated still accounts for 83% of our NAV. So here we have sorted our portfolio by the ROI that we have generated. And if we see, we have already covered S-chance separately. So it is close to 3.7x for us. And we expect this to generate another 30 to 40% return for us in the coming quarters. And then, the second best performer for us has been Equitas Holdings. So here, if we see, we initially bought Equitas Holdings at the rate of 52.4. Now, this got converted into Equitas Small Finance Bank at the rate of, I think, around 23 shares for every, I think, 10 shares that we held for Equitas Holdings. So if we impute that price over here, the price of our holding comes to around 193 rupees, which is around 3.7x. Then we look at Ujjivan Finance. This again has been a good performance for us. It has generated 3.4x for us as of today, and we expect this to generate close to another 40 odd percent return over the next like 12 to 18 months. That's the kind of expectation we have. The investment premise in Equitas Holdings and Ujjivan Finance was basically the deep discount at which the holdcos were trading as compared to the small finance banks per se. So that was a clear arbitrage that was available, which has played out over time. Then our another good investment has been PNB Housing Finance. It has done exceedingly well. Our initial investment price was close to 180, and then we also subscribed to its rights issue that came out, and it currently stands at 3x for us. We hope that this stock performs really well in the coming quarters, so we are still optimistic about it. DB Corp has done well for us. It is currently at around 3x. It has generated close to 56% IRR for us, and again, something that we are, looking to now harvest. So we believe our targets here have been achieved. So after generating close to, 55 plus percent return, we are looking to sell our holdings in DB Corp. And, and then if you look at Karur Vysya Bank, it has again done well for us, generating close to 56% IRR and is currently at 2.5x. So, a great investment for us. Anup Engineering has been our relatively recent investment. So we have generated close to 2x return in it in only a few months' time. So IRR is close to 500%, which I think is not a great parameter to look at it. But overall, we believe it's a good stock, and in case it rises significantly in coming quarters, we may look to sell the stock as well. So K Ratings has generated close to 2x return for us at an IRR of around 26%. And we believe the stock has underperformed as compared to our expectations as of now. And the corporate investment cycle is turning around now. A lot of investments are being made, so the ratings business should do well. But one of its subsidiaries is bleeding significantly as of now, generating close to 20% loss as compared to the profit generated by the standalone business. So it can also turn down in coming couple of years. But let's see. We are, currently looking to partially offload our holdings in Care Ratings. Jagran has done okay. I think there are still management issues lurking around, and we are looking at possibly selling our stake in this company. It has again generated a good IRR for us. Then Repco Finance has been a 1.7x for us over the past few years. It has generated close to 30% IRR and it has underperformed as compared to our expectations. But we believe it can still double from these levels in the next few years. So we are still optimistic about it. IndusInd Bank has performed well. We have been investing in the stock since the time it hit 400 odd levels, and our current holding is at average price of around 986, and it has generated IRR of around 38%. We expect it to reach around 1750 to 1900 levels over the next 12 months. So we are still holding the stock. DCB has done well as of now, but not up to our expectations. We believe it can, uh, you know, it has a lot of potential still to do well, so we are holding on to it, and let's see how it performs. SH Kelkar, again, this has been covered by us through a separate detailed presentation. It has generated close to 30 odd percent IRR for us, and is at a 1.3x as of now. And uh, uh, we are still looking to hold on to the company because we believe over the next 1 year or so, it has the potential to generate another 50 odd percent return. So we are still holding on to it. The chemical space is seeing a lot of pain as of now. So it's one of our recent investments generated 1.3x at a 80% IRR. So not much to read into it. We are hoping that this stock really underperforms in coming quarters so that we can really build our position over here. So two of our stocks which have kind of underperformed for us are Bajaj Consumer Care and RBL Bank. So these are two stocks. So Bajaj Consumer Care, again, it's gone through a lot of pain. Jaideep Nandi is trying to turn around the business. He's pushing hard, entering new product categories. Folk has put a lot of systems and processes in place, and the company is now seeing some benefit trickling down in the form of slightly lower raw material costs and more revenues for revenue growth. So let us see how the stock performs. In case it doesn't, then we may look to exit this stock. And RBL has underperformed. It's not done as per our expectations, but we are still holding on to it. One of our key investments that we made in the last few years. And we are tracking the company closely, and we believe there are still few years left before it really, turns around. And the numbers start looking more attractive in terms of ROAs and ROEs. So we are hoping the picture may change quite a bit by 2025. So we'll hold on to it for some time and let's see how it performs. Suntech is one of our recent investments. It increased by 30 odd percent before we could deploy some capital. We hope the stock corrects significantly so that we can deploy more capital over here. The company is likely to generate good amount of cash in coming few years. It is a debt-free company. It has a great business model, and we hope this stock corrects significantly, and that provides us an opportunity to invest in the company. So Edelweiss has done quite poorly actually. We invested in the company in 21 and it has not been a great investment for us. So we have taken a current price of around 60. This includes our assumed price of rupees 10 for Nuvama Wealth Management that has been spun out and is likely to list separately in coming weeks. So taking that into account, it is one of the stocks that has generated a negative return for us over the past couple of years. Overall, if we look at our portfolio, it has generated close to 34% IRR for us, which I think meets our expectation of generating at least 30% return on an annual basis. So our portfolio is roughly around 4.5 years old. It was down by almost 30% at end of March 2020, and the IRR today at 34% basically reflects the return that we have generated for the portfolio and at the stock level from the date of investment till today. And in the current environment, we are finding it quite difficult to identify opportunities that will allow us to generate 30 plus percent returns in the coming years. So we are currently focused on harvesting our portfolio and waiting for an opportune time to deploy the available capital. And we believe over a 4 year period, on a weighted average basis, um, we have significantly outperformed the index, which I think is something that we are very proud of. But again, this performance does not imply that we can generate similar returns in the future. So, in this industry, you're as good as your last fund or your last investment. So, I hope this gave you a brief glimpse into the kind of portfolio we have and the kind of expectations we have while we make an investment. And, we are a long-term investor, and typically our investment horizon is anywhere between 2 to 5 years. And we hope that Mr. Market gives us more opportunities to generate good return on capital in coming years. We will share more interesting ideas with you as and when they come up. So, thank you once again for your time.